Hello, I'm Mike Graham, host of the Banking on Growth podcast, as well as the CEO of Midwestern Securities. To all of our listeners, thank you for joining us for this episode of Banking on Growth. And to Nellie Schlachter with Evolv, thank you for joining us. Our listeners are they're in for a treat to learn from you today. Nellie, will you introduce yourself and Evolv and a little bit about what you guys do and how you help community banks?
Absolutely. Thank you so much, Mike. My name is Nellie Schlachter, and I'm a Director of Strategic Partnerships with Evolv. So Evolv has been serving banks and credit unions throughout the nation for over 27 years on their merchant services program. So I have completed 3 years with Evolv. Prior to that, I was actually in bank management myself for 14 years. So I oversee our financial institution division.
I know Square is in your crosshairs. Should we just jump right into that?
Absolutely. Let's do it.
All right. So for our listeners are financial advisors, they're bank execs, they might be from different spaces inside of financial services. So a lot of them may know merchant services and some may not. So if you would start kind of from square one.
Sure. So merchant services simply are when the bank's customers, the bank's business customers need to accept payments of any form whatsoever, whether that be in person through a terminal, whether that be through an e-commerce enabled website, or through a payment link. Any way that they want to accept a payment, even through a QR code, that all encompasses under merchant services. So for many years, people have just associated Square with simply credit card processing, right? Most micro merchants, mobile merchants that used to, when they first got started, they pretty much catered to the small mom and pop shops, the sole proprietors, the smaller LLCs. Over the years, Square has definitely grown, and they're supporting, much larger size businesses. But really what I'm passionate about is educating bankers on the fact that Square is actually their direct competitor now as well. They're not simply just our competitor when it comes to credit card processing, but Square is actually a full service online business bank, and they are very aggressively going after their merchants, trying to get their deposits and their loans. And I'm just on a mission to really educate community banks across the nation to be aware so they can play defense.
It's something new for me. I know I've interacted with Square when I'm at a farmer's market and I'm buying
Sure.
something, from a local merchant or something. They're a full service bank. They have deposits, they have lending, they have FDIC insurance, everything.
Absolutely. All
Okay.
the above. All the above. The only difference is they are strictly online only. Much like you've maybe heard of SoFi and Ally Bank, the online banks are really growing in popularity, especially with the younger generation. I think people more in my age bracket, getting there closer to middle age and closer to retirement, we kind of value the relationship of having a banker that we can just pick up the phone, or we can walk into the office and meet with our banker. I know my kiddos are in their early 30s, and they don't necessarily see the value in that. I mean, they're used to doing everything from an app, everything on their phone. So, the online banks really have been growing in popularity, unfortunately.
Is their device that they hook onto an iPhone, is that just a lot cheaper than traditional merchant services? Is that how they got their toehold?
Yeah, absolutely. Definitely, one of the differences, with Square, they're simply what we call a payments aggregator. They're not a true merchant account, which means it's very quick and easy. Their merchants can be signed up in a matter of minutes. There is no underwriting to go through. There's no credit pull, and there's no PCI requirements. PCI, is a federal requirement that where we are required to protect cardholder data in an effort to prevent a security breach. Square does not have those requirements. So when a merchant opens up a true merchant account, they're going to have to undergo underwriting. There's going to be a credit pull, there's going to be a personal guarantee, and they're going to be required to pay for annual PCI compliance. So therefore, it definitely is less expensive for a merchant to go with Square, but there definitely are obviously pits and downfalls to simply working with a payments aggregator and not having a true merchant account.
So I was listening to a podcast a couple of weeks ago, and the founder of Square was being interviewed. And I was looking forward to our discussion. I was like, well, this is perfect timing. I wouldn't have just sought him out and tried to hear his story, but apparently he was trying to use an American Express card to buy artwork or something, and the artisan wouldn't accept the American Express card. I think was the story. So he decided he'd create a disruptive technology, and he certainly did. So how do banks compete right now? If they're a disruptor, kind of a first to market, we can choose who we want to work with, and we can understand that Square doesn't just want this portion of your business customers' revenue. They want everything that you pointed out. They want the deposit, they want the loan. So if you think this is not invasive to your relationship, a community banker is probably not understanding what Square would really like. They'd like to disrupt and get the whole wallet, as we would refer to it. That's an eye opener for me to hear that. But how competitive can community bankers be with Evolv or different services competing against Square and their low cost structure?
Oh, absolutely. Yeah. Community banks, no matter whom their merchant provider is, I mean, every merchant services company out there, I'm sure, has solutions that will be able to compete with Square. So they absolutely will be able to compete with them. The big thing is just that the community banks need to have an active, robust merchant services program in order to play defense against Square and to prevent them from poaching their deposits and their loans. That's step number one. Because in order to bank with Square, you first have to be a merchant with them, right? You have to be utilizing them for your payments. An average person on the street or any other just business owner simply can't open up a Square business account or take out a loan. You have to be processing with them. So that's the best way that community banks can play defense, is simply to make sure they have an active, engaged program. But absolutely, they shouldn't be concerned about not being able to compete with Square, because, I don't want to bash Square. They do a lot of things great, but they definitely also have a lot of downfalls and pits, right? I mean, they only do tiered pricing, which in our world is pretty old school. It's not typically in the best interest of the merchant, long term, if they do substantial processing volume. They don't have a live representatives for customer support, for tech support. The merchant is forced to chat with a bot, which certainly has its limitations. And, if the bot can't solve your issue, then they'll, open up a ticket, and you'll, eventually get to speak with a live representative. But it's certainly not the same as just having a toll-free 1-800 number where you're going to be speaking with a live person right here in the United States, and having instant access. And they've also had, several issues with, I don't know if it's growing pains or what, but literally where they've struggled and they've been down. I mean, there've been, more than one instance where literally they've been unable to process for almost 24 hours. I personally was affected as a consumer when that happened. So there are several reasons why merchants, it's not always 100% cost, but there definitely are other reasons why merchants would consider going with a different merchant services provider.
What does a robust merchant services program look like? And I've been working with community banks for 2 decades, and I'm on the holding company board of one. I've been on a holding company board of a different one. I'm a shareholder in a couple, but I don't know what a robust merchant services versus an average or flat program looks like.
I love that question. So when I say robust, that means that it really needs to be a priority in the bank. First off, for the C-suite and the executive management team, I mean, a merchant program can be a substantial source of non-interest income and can really boost their bottom line, right? But when I say robust, that means that it really needs to be worked and needs to have attention taken to it. Several community banks simply just vet a merchant provider, want to have them on hand. So if one of their customers were to inquire about accepting payments, they would have already vetted a provider and they would know who to refer them to. But that's not actively engaged, right? When I say robust, I mean they should have someone who's responsible for overseeing their merchant program, and then they really need to be working closely with their merchant provider, with their relationship manager at the merchant place of business to actively work to grow the program, which means they are doing outreach. And the big part of it is simply letting all of their business customers know that their bank offers these solutions. The banks that we see have the strongest programs, they actually even put it on their scorecard. I worked for a large bank in the South, and, it was on our scorecard. I in branch management was required to submit 3 referrals, on a monthly basis. And, my quarterly bonus was tied to that. So, the most strong, successful programs do actually tie it to some sort of accountability or scorecard such as that.
That's good. Thank you. So it comes down to, I like to, you simplified it. It's let people know that you're doing it and then have some measurable. 3 was your example, 3 referrals a month. And then somebody has to follow through with it. Somebody has to pick up the phone or go see a business and ask for the opportunity to earn the merchant service business.
Right, absolutely. And a lot of times, usually the merchant services provider is going to take that lift off of them, right? I mean, most of the time, most banks are working on a referral program where literally all the banker has to do is just make the introduction. If they want to be a part of the call, they're more than welcome to be. But most of the time, it's not required. Bankers wear a lot of hats. If they simply don't have the bandwidth to be a part of the meetings, they don't have to be. But of course, they would always be welcome to be.
Sure. If I worked inside of a community bank, if I was a financial advisor, that'd be a joint call I'd want to go on. I'd want to meet with that small business owner and I'd want to talk about their merchant services. And by the way, what are you doing for employer-sponsored retirement plan? Do
There
you
you
have
go.
any voluntary benefits for group life or disability income or group long-term care or an HSA? If I was a loan officer, I'd want to go on that meeting with the merchant services person also
Most
and say,
definitely.
next time your line of credit renews, or if you ever want to stop renting in this strip mall and want to buy your own building, we'd love to talk with you about that. I think that'd be an opportunity for a lot of cross-selling and collaboration there.
Absolutely. Absolutely.
So how does Evolv connect with community banks? And if you would kind of walk me through, it's real simple, how the relationship works, how you find community banks and how you partner with them.
Yeah, great question. So there are several different ways. First off, we have a lot of different partnerships where some correspondent bank groups have selected Evolv to be their preferred merchant services provider. So we have multiple correspondent banks that are their correspondent bankers are out in the field calling on the bankers, and then they find one of their banks is looking maybe to switch merchant providers or start a new program, and they will refer them to me. We also have been endorsed by various different state banking associations. So we, of course, attend their trade shows. I like to go speak at their conferences, that sort of thing. We do attend several different bank shows. And then we also even have partnerships with different types of consultants to banks. So we have a lot of different entities that are referring into us. And then literally it's just a matter of attending bank shows and doing outreach, even through LinkedIn and social media posts, et cetera.
So you meet a banker at a conference and they say, we're interested, our program isn't what we thought it would be. What differentiates you? Why would they want to go further in the discussion and then just walk us through what those steps would be, if you don't mind.
Yeah, absolutely. So our first step would be we would just take a 30-minute discovery call, high-level overview of whom Evolv is, what our merchant services program looks like, just high-level overview of what we can offer product and services wise, and, see if they think we might be a potential good fit. And then if they do think we might be a potential good fit, then we would schedule a follow-up meeting and take, longer time and do a full presentation, a full deeper dive, if you will. And once we've done our presentations, of course, then, they're going to do their due diligence and check our financials and all of our due diligence documents, all of that, usually speak with some referrals. And then it literally is just a matter of signing an agreement with us. And then we are ready to get them onboarded. So it's very little lift on the bank themselves.
So with Square, the community bankers may not appreciate how much of a threat that Square is. We see that with the wealth management business as well, that a lot of community bankers don't fully appreciate. Other firms in wealth management are also offering banking services. A lot of our competing, I think I might be able to say, I probably can't say all, but a lot of the competing broker dealers that work in community banks are also selling banking products. They're selling FDIC sweep accounts inside of the banks. They're competing for cash management business inside of the bank. So in essence, if a community bank is doing business with some of our competitors that are strong in these FDIC sweeps, they're bringing a bank within their bank. And often they're private labeling those banks as big as the community bank. If you pull up to a bank, you might see a sign for Raymond James out there, which is bringing banking services inside of their bank. With Square, if a bank customer is working with Square is also trying to get those other banking services, it sounds like. So if you know you've got a customer who's working with Square, what are some tips for the community banker to approach that customer and to try to win that business, so Square doesn't just get the merchant services and doesn't go on to get the deposits or the loan business?
Right. Well, the quickest way for the banker to identify their customers who are currently processing with Square is to request a foreign ACH receivers report from their core. That report will have an ACH descriptor column on it, which will clearly identify every single one of their customers who are currently processing with Square. Now, of course, the banker isn't going to know if they have any deposit accounts or any loans with Square, but they know that they're doing their credit card processing. And Square is very, very aggressively going after their merchants, trying to get them to open up a Square checking account, a Square savings account. They're proactively offering them loans, and they make it very, very attractive, right? Because one of the things when they do open up a Square checking account, then whenever they're having their credit card processing, those funds are available instantaneously to the business owner. So they can accept a $5,000 payment from a transaction, and instantaneously those funds are available in their checking account and on their debit card. Whereas with a traditional merchant account, it typically settles the next day. Some of them, we do offer some same day funding, but it's going to be later in an ACH run. It's not going to be instantaneous, right? So the bankers should pull that foreign ACH receivers report from the core, filter it, identify out every single one of their customers that's working with Square. And then what I would do is I would suggest they work very closely with their merchant services provider and come up with a plan on how they're going to reach out to every single one of those merchants and simply ask them if they would like a free analysis, see if we can leave them in a better place than they are today. So the big thing is the banker needs to go after the Square merchant, attempt to get them off of Square and onto their bank's merchant program, where Square can no longer poach those deposits and loans.
Simple and powerful right there. Pull the ACH report, find out who they are, call, win the business, and then you keep Square out of the deposit and the loan side for the customer.
Absolutely.
Really good. That ACH report tells so much. Same thing on the wealth management side. We can see where the deposits are going. How many people have accounts with outside brokerage firms? The data is right there. If the banks want to take a little bit of time and understand that data and build sales and marketing campaigns off that data to be effective about winning business and maintaining their kind of pole position in the competitive field.
Yep, most definitely. What I think makes Square so attractive on their banking products, like their savings accounts, they advertise are FDIC insured up to $2.5 million, right? Where a traditional community bank, they're insured up to $250,000 per signer per beneficiary. That's very, very attractive. Plus, they pay 1% APY on those, right?
Mm-hmm.
And then on their loans, it's just mind-boggling. On their loans range from $100 to $350,000. And there is absolutely no credit pull. There's no application. There's no personal guarantee. There literally is zero risk from the business owner. Square is taking on 100% of that risk. I mean, it's very, very attractive to a business owner. You know, they don't have to go spend the time to fill out an application. They don't have to have their credit pulled. They don't have to sign for personal guarantee. And Square doesn't charge just regular interest rates like we bankers do, but rather they just simply charge one flat fee up front when they take out the loan. Now it's quite expensive. All of their examples on their website show it's a 14.5% fee up front that is attached to the loan, but then the merchants can repay those loans through their sales. So when they have strong sales days, they'll pay back a little more. When they have lower sales days, they'll pay back a little less. So those are just some features that really are substantially different from what they're going to get from their community bank, which, you know, really just makes their banking program that much more attractive to business owners out there.
Those are great things to point out. Yeah, thank you. So great things to know about the competition.
Most definitely.
Yeah, thank you.
Knowledge is powerful, right?
Yes, yeah. So we want people to tune into our podcast and listen and get these different perspectives and be aware of the changing competitive landscape of banking, always changing. Nellie, if our listeners want to learn more about you and Evolv and the work that you do, what's the best way for them to reach out to you or to follow you?
You know, the best way they can follow us, our website is www.poweredbyevolv.com, and follow us on LinkedIn and social media on Facebook. We also have weekly podcasts. We have a very, very active social media, and they can connect with me directly on LinkedIn. I'd love to connect with your bankers.
Awesome. Well, thank you. I learned a lot in our brief conversation, and I appreciate you taking the time to share with me and with our audience.
Thanks for having me, Mike. Greatly appreciate it.
You're welcome. So to our listeners, on behalf of all of us at Midwestern Securities and Banking on Growth, we hope this added value to you. Thank you for joining us. And until next time, we'll catch you on the next podcast. Thank you.
This has been another insightful journey with Banking on Growth with Michael Graham and Midwestern Securities, a member of FINRA and SIPC. We appreciate your time. If you found value in today's discussion, consider subscribing for more thought-provoking discussions in the world of finance. Your support helps us continue to bring you quality insights. If you have a topic you'd like us to consider covering or have thoughts on one of our episodes, we'd love to hear it. Just email us at media@midwesternsecurities.com. Remember, the power to grow is within you. Thank you for being a part of the Midwestern Securities community. Until next time, stay inspired and keep banking on growth.